Hey, we're live June 27th, I think, 2024. I'm Shane Oglow, Rogue Trader Academy, along with my partners always, Richard Hodges, and we, of course, are the Rogue Traders. So, end of June, last episode for June. So that's kind of exciting. We're going to get into the actual summer holidays in July, August coming here. So hopefully we'll have a little bit more action than we had last year. But as always, we'll wait for some people to roll into the room. We got more coming in, so we'll just kind of bore you with some stories and stuff for a minute or two. Something interesting. Actually, speaking of stories, on this day in history, I like to look back and see what happened. Uh-huh. I saw that the Great Northern War was 1709, where Charles XII of Sweden was defeated by Peter the Great. And you're thinking, well, who cares? Like some obscure battle a long time ago. What's the big deal? Well, actually, many of you people I'm sure very few of you people, but some of you people know that I spent a lot of time in Ukraine over the years and lived there. And I went to Poltava, and that's where this battle happened. And in Poltava, they've got this cool museum, and they've got all the relics from that war. In fact, they've got like the death masks of, I can't remember Karl, I think that was the leader of the Swedish army. His death mask is there, which is kind of creepy, but kind of cool too. But the interesting thing about that was, this typical little Ukrainian village. There's like this old woman who's sitting there in the museum, and when he came in, she would come out scurry along, and she'd turn the light off. And then as soon as it looked like you would stop looking at whatever was in that room, she'd turn the light off. And she'd turn the light on, then she'd turn it off, right? It's like she was like wanting you to get through as fast as you can. I was like literally the only one there. And she followed me around as I went through the whole museum, turned the light on and off. And anyways, but more importantly, so the Charles XII, who was the leader of the Swedes, when he lost that, did you know he went off into exile in the Ottoman Empire at the time to a place called Bender? And I was wondering if that's where the term "you go on a bender." If that's where that came from. And maybe, maybe not. So maybe someone smarter than me or more into history trivia knows. All right. Let's see. We got Vladimir. Hey, great to see you. Giandrea, Andre, right on. Lots of great people.
Your voice is still on the cusp, isn't it? You're still suffering with your sore throat.
Yeah, it's like getting better, but it's been about 3 weeks I've had this weird voice. It's gotten better, but maybe by next year it'll be back to normal. I don't know. Anyways, let's get moving here. I think we're ready to go. And speaking of Ukrainians, we've got a couple of wonderful Ukrainian people that join us every episode and ask a lot of really great questions. So let's rock and roll. Hey, we are ready to roll here, and this is an interesting episode because we've had a lot of weakness. In fact, since the beginning of June, I think we were down around 18%, sort of tip to tail. So most of that was a grind down, but of course, last week we had a big dump, and we've got down to the bottom of the range. So today we're going to talk about our blue pill strategy to stay longer, to stay long for longer. I don't have to explain the joke, I'm assuming. I'll just move on.
You might do to these millennials because they're not very standing in the ways of 1960s innuendo, but.
Fair enough. I don't want to get into graphic detail, and for you to get it, you got it. So the price was soft. Let's get long. Let's stay long, and because that's part of our strategy, which we're going to share in our synthetic miner account today. We're trying to get long as much Bitcoin as possible, regardless of price action, even if the price goes down another 50%. And we want to just keep accumulating because we've got this long-term vision. So let's take a look here. We've been trading this account that we set up 17 weeks ago to the day. Started off with 0.0825, 1163. Yeah, we're up a little bit from last week. Bitcoin Cash, Bitcoin Equity down a little bit. Bitcoin Mine, we're up 20%. So, the price made a significant move down. It's not everything's going to go perfectly in a perfect straight line up, but we're pretty damn happy with it. And I'll show you the graphs in a minute. Cash down a little bit, as you'd expect. The US dollar value amount is down because the price of Bitcoin is down so much. So that makes sense. Annualized return, USD 89% versus hodling down 11%. So we're still pretty damn happy with all that. Here's a chart. This is the BTC return. And, hey, a little drop off there, but recovered somewhat. Interestingly, we run another account called the Dirty Bird, and you have to tune into our live streams to see that. That account has completely recovered, gone right back up to the trend line despite Bitcoin's price not recovering.
It's all-time highs, isn't it?
Yeah, it's pretty damn close if it's not at all-time highs. And it's just interesting because, certain strategies are going to perform better in certain conditions. And we don't know what those conditions are going to be coming up. So it's nice to have some different strategies running. And some are going to outperform others at different times. One more slide here. This is the US dollar return. Took a bit more of a hit because the value of Bitcoin is down. But what are you going to do, right? What are you going to do? So we're pretty happy overall with the performance. Now, I think the thing to keep in mind here is, and I'm going to share my chart in a second. With this strategy in particular, we will see. Let's just say Bitcoin stays flat for the next 1, 2, 3, 4 weeks. It bounces around $2,000-$3,000, whatever. All that's going to come back in, and we should be back up at highs or beyond highs. So sometimes it's just a bit of a waiting game. An asset's price doesn't just keep moving in one direction forever. That very, very rarely happens. It's normal for these influx of price action and support and resistance. And sometimes you just got to wait for that. When you're a short seller, or when you're selling volatility, or you're selling against price, you just got to wait for that to flow back in, because we're adjusting, we're moving things around, and we're waiting for it to flow back in. All right, let me turn my screen share on here and my charts. Where's my charts? I think I gotta find the right screen. This should be it. Yep. That's not it. That's gold. Nope. Bitcoin. Here it is. All right, let's go to the 1 hour. And here we are. So this is kind of a lay of the land. What's happened in the last a while, but what I'm talking about was this move here. Look, tip to tail, 19%. That's a pretty big move from June 7th to now. So 20 days basically. That's a damn big move at 20%, right? So this is what everybody had freaked out, and let's face it, this hit the bottom of the range. We expected it to come down here and stick for a while, even if it does continue carrying on down. It might, who knows, right? I don't think it's going to do that, but it could. And we weren't surprised to see a little wick through. We saw wick throughs over here. We saw wick throughs here. So, consolidation. I personally think that what we're going to see is probably just something, kind of like this, just bouncing around, just goof around. But I think we'll probably eventually head up back into the middle of the range. That's what I suspect to happen. Now, I'm not saying this is going to go all the way up to the top of the range. It might, who knows? But I wouldn't be surprised if we got a bit of strength, got back to 64, 65. Maybe that happens in a week or 2 or 3. I wouldn't be surprised at all. I don't really expect this to just carry on down, but it might. If it does, well, that's a different ball of wax that we're going to be looking at. Kind of this area down here where we had previous support at 57, but it's not exactly strong support. If it's a strong catalyst, this thing's going down. And if it does, well, we're looking at low 50s, right? We've got this area kind of down here that we'll be looking at to stop. So again, I think that look at this chart from we're on a 4-hour chart now, bouncing around. This is just the bottom. This is no different than here at this time. Of course, anything can happen. Now, we did notice that there's, I think we had about 9 days in a row, if I'm correct, Richard, of ETF net outflows. But the last 2 days we had inflows, and I think you said that it was. It
was interesting too, because GBTC actually experienced positive inflows yesterday. The Grayscale Trust, which is bizarre, right? Because who the hell would buy that when you can buy anything else and pay lower fees?
Yeah.
And it was
seriously though, is there a rationale for someone paying those high fees to get into that trust? Like, I don't understand what that might be.
Makes no sense at all, unless it's just habit.
Could be, yeah.
Yeah, I think there were inflows into FBTC and HODL. Not huge, but they were there.
Mm-hmm. Mm-hmm. Yeah. Okay. I don't know. If we keep seeing net inflows, a little bit of good news, I think we could be back up in the mid 60s pretty soon. So
yeah, my concerns about chasing this market down are that as soon as, at the moment, all the inflows we've seen into what are they called? ETFs have been essentially retail. And Shane, you're frozen. No, just wait for Shane to come back. Yeah, all the inflows have been essentially retail. And it takes ages for large institutions to approve a new product and offer it to their customers. So I don't expect we'll see institutional buying of ETFs at least until the autumn. No one's going to do anything in the summer, and then at best there's a sales campaign in the autumn to get people to go and buy these things, which then drives the price up. And you see that actually in the vol surface. Shall I share the screen, Shane?
Yeah, do that. I'm back now, right?
Yeah, you're back. Yeah.
Okay. Yeah, you froze up too, but I think it was on my end. And I think you mentioned this too on our last members call. We have a call every Monday with our members, and you were talking about kind of that system where you've got these people out there pushing these funds, and these funds for decide, hey, we're going to allocate 0.5% to Bitcoin or 3% or whatever it happens to be. That process takes a while to filter down from board meetings and everything else too.
Yeah, it can take years because big financial organizations move slowly. But you can kind of see the sentiment in the vol surface. If you look at this, I won't go into the detail here, but this 10 delta risk reversal measure is a little bit of magic that I use to try and get a feel for where people are in terms of sentiment. It's kind of telling us that people are a little bit fearful out to 1 month, a little bit, but not much, no more than normal, to be honest. Actually, the fears come right back. This was minus 10% yesterday, minus 12. And then out beyond 3 months, the sentiment is actually positive. People are willing to pay more for calls than they are for puts. And I think that sort of matches the macro view on the ETF story.
Mm-hmm. Yeah. Okay, cool. Hey, do we want to I don't think we need to look at the spreadsheets for the Synth Miner account. We did the overview. Why don't we jump into the strategy, the blue pill strategy here?
Yeah. So shall I go to screen share again?
Yeah, I guess we could make a trade on the Synth Miner account live here and
do it live,
show people. Yeah.
Let me share
I see a message from Johans. I'm not looking for BS fundamental stuff. Plenty of it out there. Any recommended books for looking at strategies, heading, etc. Straight to the point.
Fair enough. Okay, let's fix this. So our Synth Miner strategy, which we created just for you, it essentially sells three put spreads and one call spread, and it just does that consistently. And it seeks to pull in 10 basis points a day, i.e. 50% a year increase. So, of course, being short 3 put spreads in a bear market isn't great. So as the volatility drops in the market, we refrain from reselling more put spreads. So I think we're only short 2 or 2x. And as the market sort of, as we started getting in the money on our put spreads, we had to think: do we want to be rolling these put spreads out and for time, and rolling sort of 64k calls, put spreads in the money puts down to sort of 58 in 2 months away, or do we just stay long? Screw it, let's just stay long, because eventually this will break and this will all come back. So what we need to do is pull in enough money so that we don't lose money by staying long. So what we're doing is we've been selling for every in the money put. We've been selling 2 call spreads, but very, very tightly controlled call spreads with normally double cover. And in fact, whenever we sell a call spread like this, we always put a buy order back in at 5 basis points, so that if there is a wick down overnight, it gets bought back, and we can come back fresh the next day and maybe do it again. And in fact, last night we order history, trade history. Here we go. Somewhere here, there was one of our call spreads got bought back, and it wasn't a reduce only, so I can't see it where it was, but it's one of these 64 call. There we are. 28th. So we should be shorter call spreads because really here we are in the money on two lots of puts. We're going to wait till we might roll this 64k today. If we do, we're going to roll it to a 64k or a 63k. So we're not going to try and push it out of the money. And because we're going to stay in the money, we can sell 2 call spreads against it. Now, we've actually already sold a call spread expiring tomorrow, and that's to capture.
Yeah.
Is that tomorrow? Not tomorrow. Day after tomorrow.
That's the 28th on Saturday.
So
Or
29th.
Yeah.
And
I was just going to mention, Richard, that we're selling these call spreads, we're keeping them very short dated.
Yes. Well, you can see the vol. The reasons why the vol here is 47% or 48%. So that's pretty good vol given where the market is, and even what's overnight is 48. It has been down to 35, so we're keen to sell that vol. And if we could just go a week out, the vol drops to 42, and so a bit less exciting. But you see, we're actually in the money on 0.3 put spreads. Just the 62k really it's out the money. So actually we could afford to be short 6 call spreads, maybe 5, right? Or 0.5.
Yeah.
So what I'm thinking is we can go and do, as we're going to roll this 64k overnight. And the reason we're going to roll it is because there's only 5 basis points left of extrinsic value. So this is basically all intrinsic value, and there's nothing to be gained other than just hoping the market goes up by keeping that position on, because we're not getting any more time decay out of that. So I think what we do here is roll this out maybe 2 weeks, maybe down to 63k, maybe leave it at 64, and we sell 2 call spreads against that position.
Yeah. So, and I'll just summarize here. So what is this blue pill strategy? And the point of what we're trying to do is we're trying to outlast the market if it is in a bit of a bearish situation. If you were leveraged, you had perps, you might run out of margin, you might get liquidated, all kinds of things. But this is trying to outlast the market. So what we're doing is a bit counterintuitive, is we're okay to sell in the money puts. And we cover things off on the other side by selling 2 call spreads. The other thing I'll mention, that what we do with these call spreads is we usually try to double cover them. And that's, because there's a good chance they're going to go up the wazoo. Okay, fine. If it does, we'll adjust it. But if we've got that double coverage, it allows us to take one call spread, double our risk by moving it up, rolling it up. But we've got the coverage in place already. So it's fully covered, even if we have to double our risk. I hope that makes sense.
Yeah, it's worth looking at the prices here. So I'm just looking at this 62,500 call for Saturday, and Saturday is good because it gets us the expiry for tomorrow on deribit and also CME. So there's a lot more vol in the Saturday than there is in the Sunday. And I'm thinking if we sell this for, we'll try for 65, but we'll probably end up selling it for 60. This 62,500, we could cover it with, say, 2x of the 65,500s.
I think you get 65 right now for it.
You reckon? Should we try?
Yeah. No one's there. You could jump in because the mark price just went to 65. So, and sorry, where did you want to buy the cover?
No, I'm thinking 65,500. So it's just $3,000 up.
Okay, filled. You got it. Yeah.
Let's try for and then we buy twice as much of the cover. And that's just in case there is a major breakout on the upside. Yeah. We don't get so badly hurt. We don't have so much of a problem. The chances are this will never be needed, but it's nice to have it. There we are, 7.
Yeah, we'll have to go up to 7 just for time expediency.
And then, so as you see on the margin screen here, we're still massively benefiting from upside moves. Now that's largely because we've got a load of residual cover here which expires tomorrow. So just be mindful that will go away. But we could afford to sell another call spread here. And the reason is that if we're paying, say, 12 here, and we've received 65. So we've received net 52 basis points. And if we do that twice, we've received net 100 basis points. 100 basis points is 1%. So we're actually covering ourselves for a 1% move down on our against our in the money puts. And we're getting that money every 2 days. So every 2 days we can pull in an extra 1% of resistance against loss on the other positions. So for every in the money put spread or put, we're happy to sell two call spreads and pull in 100 basis points every 2 days. And if we did that for a year and the market kept on going down, then we'd actually pull in 150% of what we lost.
So I think it's important to, trade, unless you're a programmatic trader where you're trading through a computer. If you're manually trading, it's always important to keep things in context. So this is what we want to do right now. The conditions might change in 2 hours, where there's some news and it goes up to 68,000. Well, obviously our short puts are going to be fine, and we'll have to deal with those calls. But right now we've kind of come down. We're in a slow market. It's typically not moving very fast. That can change. It's Bitcoin, and we're happy to do this for now. But we keep these very short dated. So let's just say we have a spike to all of a sudden 64 or 65. Well, we've got some pain we need to deal with, but it's such short dated pain. We can move that out to the end of July if we needed to, and it's not that difficult to cover. Keeping that really close to our chest, and it allows us to respond a little bit faster to changing market conditions. Again, as Richard said, if the market keeps going down, we just keep doing this, and it'll be okay. We're giving ourselves that protection. But I think the market's more likely to bounce in a channel, and that's okay too. That makes it easy for us to adjust these, right?
Yes, and it's also worth saying that if the market does go blasting up and put this position in trouble, then vols will rise. There tends to be a correlation between the underlying spot price and implied vol, which makes rolling these out much easier. And so we roll 62s to 64s, and then 64s to 66s, 66 to 68, 68 to 70, and eventually we're out of our balls. Meanwhile, we're selling puts, and we're happy. Yeah. So, but I mean, I don't think either of us expect a major blast up until September, right? Maybe end of August. So I think we're quite comfortable to do this. And I think
there would have to be a catalyst.
Yeah, I think we could do another one here. Should we just do another one? I think we will. Yeah. Now,
you're looking on the 29th, you mean?
Yeah. There we go. We're taking, and just buy two of the cover.
Richard, I don't know if you can hear me very well. I think I've got a bad connection.
Yeah, I think you keep lagging.
Yeah, something's going on. So maybe it's the apocalypse. I'm not sure.
It's only affecting your valley, not mine.
Okay, good. All right. So
I'm just going to nudge this in just to get it done.
Yeah.
Now, so and I'm mindful that I'm trading individual legs here, not spreads, and so I'm paying a bit more in fees than I should. And there is a question about fees, but let's come to the questions when you're ready.
Yeah. Okay. And you can see that our theta is actually really high. It's around $100 for the small account, but our margin use is very, very low. Double coverage helps with that. And of course, this short data is going to roll off real quick. If the market doesn't move much over the next day or two, that value is going to get sucked into our equity really quick, which would be nice.
Yeah.
Okay. So Vladimir, sell news, buy rumors. There's been news that Mt. Gox Bitcoins will go on the market, and that's why we deep into 58K. Could be. He says reason for buying might be because of taxes with GPTC. I know that's a reason for selling, not selling, but
not selling. Yeah.
I don't know.
I think it's probably just idiocy, or somebody can't be bothered to. Maybe somebody wants a short-term leverage play on Bitcoin, and they can't be bothered to switch providers because the carry costs aren't going to matter for for a week or a month.
Yeah. We had a few questions about fees. they do get up. I don't think we've done any analysis on what we're paying in fees in this particular account.
So, I mean, the more you trade, the more fees you pay. That's fair. And the fees can feel quite aggressive. And we all, we wage a continuous campaign on your behalf with the management of deribit about fees, but every exchange has to juggle happy customers versus staying alive. But I think, if you trade this as a spread using the strategy, the combo, or the strategy thing up here,
the combo too.
Then you'll actually only pay fees on one of the legs. So if you get the combo through, so I could have been more patient and traded it through the combo screen. And I'm told that the liquidity in the combos is going to improve soon. So but that will become.
But we don't have time on this show to do that. So
just sit around and play with it. No. And also, it's much easier to show you on this screen the actual effect of where the positions are. It's more visual, so I do it here. But the one way we do mitigate fees is on these trades, I'll let them expire in the money, or I'll just let them expire because there's no fee for getting settled into, and then I'll roll them once they're expired, using the settlement price as the buyback price.
Yeah. Speaking of fees, I remember once when I was prop trading, I was on a floor full of guys. And every now and then you get this pocket of interesting opportunity in a particular equity. And I was buying on the bid, selling on the offer. One side I was taking, one side I was making. And it was on an expensive ECN where I was taking liquidity. And I would just sit there as fast as my fingers could go. I was going, trading that spread. And I'm yelling to all my guys, I'm like, get in. Everybody's running over to run on. And I did that for about 3 minutes straight. And some new guys came over. And they said, holy shit, your fees are going to be through the roof. I said, yeah, but I just made $2,000 in 30 seconds of it, which I'm keeping $600 of. How much did you make in the last 30 seconds?
Right.
I didn't give a rat's patootie about because is the net result. And I realize that's a scary prospect sometimes, but fees are part of life. And hopefully deribit will get, maker fees much lower or close to zero, where we can, at least mitigate a big chunk of those fees. But
who knows it? Normally, all the price improvements will come through trading combos. So I think once the combos have more liquidity, it'll be better, right?
Okay.
Okay.
So a question here from Johannes: any literature recommendations for options? I don't have any for options because I learned from a mentor on a floor, but. And I don't. Every time I've read an options book, literally, I think I'm going to lay down at night. I'm going to read this options book and get some ideas. 2-3 minutes later, it's like donk. The book hits me in the face and I'm asleep. It's one of those things that, for me, I've never read a good book on options. I'm sure there's lots out there. Richard, do you have any?
I also didn't learn from a book. I also learned from a mentor and by visualizing this myself. I actually have no formal education at all, other than how to fly a helicopter. So what I would recommend is that you sign up for a silver or even gold membership of the on Rogue Trader Academy and learn from us direct on video calls, face to face.
Well, Johannes, excuse me, has a comment. He says, if Richard turned all parts in which he excused himself for being boring from the first few episodes, Vol smile, into a book, I'd buy it. All right.
You know what? That's a fair point. There is no textbook on how to understand Vol smiles surfaces. It's a good point, because you learn it on the floor when you're in a bank or a fund, and no one ever shares it because they're all trying to make their own money. It's a good point.
Yeah.
We should do a masterclass on that.
We have loads of extra time, right? We should though. Nick says Macmillan is a must and a tasty favorite. Yes, Macmillan is a well-known name in that world for options books. Check it out. Volodymyr, position builder, best source to educate yourself about options. Yeah, it is a good tool. It's kind of confusing at first when you go into the position builder to try and figure out what the hell all this. But if you spend some time there, it does give you, and some people are just really good visual learners, it does give you a nice visual representation of what each position will give you depending on what the market does. And I think that's a really important thing, because options get a little bit complicated because you've got time involved, you've got decay, you've got volatility, you've got all these things and price movement. So, yeah.
Little wick there. I guess people are starting to re-hedge before expiry, so they're moving the market around.
Well, no. I think they're watching our show, and they need to they need to adjust. Nick says the book's 1,000 pages long. Yeah. Sheldon Natenberg. Tom says Sheldon Natenberg must be a book. Option volatility pricing strategies techniques. Okay, thank you for the link.
There's loads of books for strategies and understanding all that stuff. But actually, where the real magic is actually being able to visualize a volatility surface and understand how it's going to evolve through time. If you can do that, then you stand a really good chance of making good plays on your prop trading, because you can anticipate these movements like the waves on the sea, right? Like being a surfer. In fact, it's just like surfing. I mean,
someone's going to start talking about Fibonacci.
Yeah.
Shh.
Okay.
Shh.
All right. We've got some Q&A here.
Yeah. Def says, what do you expect to happen to Bitcoin if we end up in a depression? Well, I'm usually depressed every time I look at my bank account. So,
I was having this conversation actually with because you can only see some of the questions. I'll go back through the ones because you've reconnected, haven't you?
Okay. Sorry. My
okay. So yeah, I was having this discussion with a good friend of mine who runs a wealth management firm two nights ago, and he was saying that he fully expects a war to start, proper war, with Russia dropping a tactical nuke on someone, and that will cause the price of Bitcoin to go up. Which was interesting because he's like the most risk-averse, straight TradFi guy you can imagine. But his view is gold and Bitcoin will go through the roof on that event. So, and I'm long gold and long Bitcoin. So let's hope. Well, question from Vladimir: will we drop again and bounce 60k level? Bounce off the 60k level? Probably. I mean, it was only $1,000 away. Of course, it will.
Seems likely.
Yeah. Your Highness, any literature recommendations for options? Well, we've been through a bunch of that. Doing it is the best way, really, and doing it and thinking in terms of the vol surface is really the best way. I'm not looking for BSM fundamental stuff. Plenty of it out there. Any recommended books about looking at strats, hedging? Well, see, that's another thing where no one will ever teach you because it's all proprietary, top secret information that they're all trying to make a living out of, and if you're being paid $500,000 a year to make money for a bank or a fund, you're not going to go sharing your secrets with people so that they can compete with you. But the Rogue Trader Academy is there for all. What do you expect to happen in BTC in a depression? Yeah, it's a good question, right? Depends. If the credit spigot is cut off and we actually have a Great Depression like in the 30s, well, if there's no cash and no credit, then everyone's desperate for cash and they'll sell any asset they've got. So we'll see everything go down. And then the question is whether Bitcoin goes down more than houses or gold or anything else. And that's another thing we were discussing 2 nights ago. That's probably a good argument for keeping a bit of cash lying around in your bottom drawer. Just keep your last $500,000 of cash in a cardboard box by your bed to pick up bargains.
Maybe hide it somewhere better than that, but
can you please talk with deribit to improve affiliate statistics since you in touch with them? Thanks. By all means, you would laugh if you knew how much bitching I did to deribit.
This is why they're not inviting you back to Amsterdam.
Yeah, what they expected was a couple of succinct opinions from me.
No, they know better.
Yeah.
No, it's great that you were there. I know you were there doing some NBA stuff and you can't talk about, but it's good to also talk about this.
Yeah, I did bring a lot of the concerns. Well, no, a lot of suggestions for product improvement, and I was privileged to be invited to discuss that. And actually, I will say that the head of products in deribit took everything I said very seriously, and they do listen, and they do listen to feedback. Even if you never get feedback, that they've listened to your feedback, it does ripple through the company. So do give them feedback if you've got something sensible to say. unlike me.
Yeah. Okay. I noticed that Vladimir said too, he read an interesting text about USA government debt, which is being backed by USDT at the moment. I haven't read or heard that.
Yeah, USDT is the biggest holder of euro dollars. The Tether Corporation is literally the biggest holder of an issuer of euro dollars, i.e., dollars outside America, and they hold. I think they're the biggest holder of treasury bonds. It's amazing.
Oh, really?
It's ridiculous.
I had no idea.
Yeah, it's the biggest single private holder of treasuries. Yeah.
Okay, cool. We're almost out of time. One last question here from Tom. What are the criteria that generates your bullish or bearish bias? Well, I like to use the charts, but I'm not a super technical analyst. I use very basic analysis because I don't want to get too involved, but it's really just price action and sentiment. Like, so for example, I think we were talking earlier, even 2 days ago, the funding rate started to go positive quite quickly after that dip down. And that's a good sign that people aren't really buying, that it's going to keep going down. I think the 10 delta flies were also pointing upwards.
They're less negative, yeah, in the shorter dates. So yesterday we were like minus 12%, 10 delta riskies, which was people getting quite seriously bearish and buying puts. Now they're minus 5 or 6%, which is just normal. So the shape of the vol surface is important. The curvature and the skew of it is moderately important, less important actually than the at-the-money volatility and the funding rate on the perps. So a big signal for me is if I'm seeing positive funding on the perps, getting strongly positive, I'm seeing a rising market and I'm seeing rising vols, and I'm seeing skew to the upside, then I know that everyone's buying or covering shorts, and we're going to be going for some time. And if I see vols dropping and spot plateauing off, and and the funding rate drop, then I kind of thinking, well, no one's buying this; they're all scaling out of their positions. So down is more likely than up.
I will mention too. Sorry.
Go ahead, no, please.
I was just going to say that, over the last year, we have a really good relationship with the guys over at Immersive Finance, and they build tools. And we've noticed that as they've done some stuff specifically very unique, but we've also asked them to do some things. We've noticed certain things happening over the past year that we never really paid that much attention to before, or maybe we didn't have access to. And we have talked about maybe putting a tool together which signaled changes in the markets. Now, whether that would be more of a scalping tool or a long-term trend tool, I don't know yet, but we tend to get busy with other projects and funds and stuff. But that is something that I think we still want to put on the table and maybe get launched this year if we could. But it's basically, these questions are all part of a larger piece of picture that we look at.
Yeah, we should do the Rogue Trader sentiment indicator. So just dump all this information down and just put it into a meter between 0 and 100.
Yeah, or we have to give it a much cooler name, I think, actually. Otherwise.
Yeah, we can
think of something clever. Yeah. We're going a bit way past time here. Hey, Vladimir did say that they've improved the position builder with his suggestions, so that's great. That's great. Yeah, deribit is paying attention. They want to improve the product for sure. I think that's it for questions.
I must say I met their head of tech and their head of products, and two nicer and more competent guys you could not meet. I was really impressed at the level of knowledge and love of the subject that these guys have, and genuine desire to improve the product. So it gave me a lot of faith in the firm.
Yeah, fantastic. All right, hey, I think that's a wrap for today. I think we got through all the questions. 10 minutes over time. Sorry about that. But hey, I wish you everyone a great weekend, and let's see what this week brings. I think we're going to go sideways, but we'll see what happens. And let's see if we can get this synth miner account up closer to our previous highs, maybe by next week. So until next week, everyone, enjoy your weekend.